Goh Koh Huat, Chief Operating Officer and President of Real Estate at Government of Singapore Investment Corporation. The numbers that are disclosed suggest about 100 billion plus of assets under management. So you're a busy boy. But what I want to start with is, I want you to imagine we're in an airport flight lounge. Now that shouldn't be hard for you because I know you're often in the lounge. There's a bit of a delay. You found a nice spot, you're sitting back relaxing, and you're just sitting here talking to your old friend Antony Green, who you've bumped into in the flight lounge. That wouldn't be unusual. And I want to start by just catching up with you and understanding a little bit about what you've been up to. And what I understand is, in the last year or so, 2014 Asian Industry Figure of the Year in the PERE Awards, so number one in front of Chris Heddy at Blackstone, and 2004 PERE Award again, GIC Private Asia Institutional Investor of the Year in front of CPPIB. So, you know, you've risen to great prominence. I want to understand whether, you know, you're as close as we come to a celebrity in the real estate game.
So I see Antony is trying to bring a little bit of the down under razzmatazz to Singapore. If anything at all, I think those awards really is an indication of how fortunate I am to be working in an organization where the breadth and the depth of work that we do in real estate is truly astounding. And I've been saying this for the last five or 6 years that I've been with GIC Real Estate, that this is probably one of the most interesting and complex real estate organization that I've worked with in my entire career. We do all sorts of stuff all around the world, and there's hardly anything that ever land on my table that's not truly exciting and invigorating every day.
Very good. Now, for all the people around us, so of course we're just having this intimate conversation, but I wanted to start by talking a little bit about your career, let these people get to know you a little bit better. So indulge me a little bit here, but you were groomed as a leader in Singapore, but you took an unconventional path. As a president and Singapore Armed Forces scholar with an economics degree from Cambridge, you carried out 10 years active service in the Singapore Armed Forces. In 1996, you moved into the real estate sector and you joined JTC as an executive, and JTC, the lead agency spearheading the planning, promotion and development of Singapore industrial land. And you had various roles there at JTC, including working in India. And then in 2002, where we met, you took on the role of CEO of the Ascendas REIT, which was the second REIT to list in Singapore, and was a project in partnership with Macquarie Goodman Group at the time. And then you did that for a while, and unusually, some would suggest, as a leader in a Singapore GLC system, you stepped out. You decided to gain some experience in the outside world, and you joined Tishman Speyer. You spent time in India, and then you spent time in the US, and then you returned, obviously, to Singapore with GIC Real Estate, where you've now become the president of the real estate group. So, I mean, I was just wondering a bit of your thinking on your career, I mean, and how it's progressed. It seems an unusual path, and, you know, what were you thinking along the way?
I guess, as with most things in my life, one of the things that I learned from the military is that you never have perfect information when it comes to making decisions. So one just needs to be directionally clear where one is headed. And then beyond that, you basically take steps forward, and as you take a couple of steps forward, it becomes immediately clearer what the next steps ought to be. And so I've always let the principle guide me through, be it personal career decisions or professional decisions. Because in the world of real estate as well, we are often asked to make calls that are not immediately obvious. We don't have all the information in front of us. So there's always some uncertainty. But if we are quite clear about what our objectives are, then we are always headed in the right direction. And obviously the path is not always a smooth one, and you just adjust as you go along. And that's what I do with my career.
And the decision to step outside GLC, that was probably a big call.
Yes, actually that was not as big a call as stepping out from the military into the private sector, because that's really quite unusual. It was driven by the same thing. I was quite clear about what I was after, and what I was after is really learning. I didn't want to be at the age of 50, which I'm at now, looking back and having spent my entire life in the military, which is actually very interesting, but not having known what the business world is like. So that motivated me to try something new. And then after 10 years in Ascenders, again, I was at a point where I sort of looked at myself and I said, it's time again to think about learning new things. And then the question is what? So I was clear that it needed to be something new. I didn't know that would land me in New York with Tishman Speyer. So that's what I mean by directionally clear, and then you take those steps based on those thinking.
So but you've obviously developed a passion for real estate.
Yes.
So I'm interested as an asset class, what interests you about real estate? You know, what drives you to be involved with it?
That's a very good question. I recently spoke to my chief risk officer, and he said, Goh Koh Huat, in my next life, if I were to do this all over again, I want to be in real estate. And I said, oh, why? He said, you guys have the most fun. You get to invest, which is something that I'm passionate about, he said. But at the same time, you get to visit all these really nice properties around the world. And that's the attraction for real estate for me, right? As an investment person, investing is, we all have great passion for investing. I mean, it's fun, it gets your adrenaline flowing. But yet, at the same time, in real estate, we have the opportunity to deal with something that is real. And every time you get to a piece of real estate that is done really well, I mean, it's just amazing. And for those of you around the room who belong to the world, the developers, your job is even more interesting because you get the opportunity to create spaces that, if done well, just like this hotel, people will look at it and say, wow, it's great.
Yeah. Look, in global real estate markets, names we know very well are your GIC predecessors, Dr. Seek, our beloved APREA chairman, Lim Swee Guan here. So taking over GIC real estate leadership from Dr. Seek with some pretty big shoes to fill, I wonder if you can make some comment about the legacy that these guys left behind, and I guess any deeply seated DNA or things within the organisations which you've tried to capture and then build on.
Yeah. You started off with naming all those awards that were conferred to GIC. I would say that those awards, the real celebrity behind those awards are really folks like Dr. Seek and Swee Guan, who spent a good part of 15 years of their life building up GIC real estate. Without folks like Dr. Seek and Swee Guan, we would never be in the position that we are in today. So I'm quite fortunate to have inherited such a fine organization from those gentlemen. That said, I would say that challenges of organization are always different because the environment is always changing and morphing. And as the environment change and morph, if we stand still as an organization, it just get into a situation where you begin to degenerate. So the challenge for us really is after the global financial crisis, given the changed world environment, how do we respond and move forward?
Yeah.
And that's something that we've been working on very hard in the last 4 or 5 years.
And while you've been working hard, in April last year, you were also appointed to a newly created role within GIC as Chief Operating Officer, in addition to your real estate responsibilities. And I guess I did a bit of work. GIC now has 1,200 people, employees, located all over the world, but also derived from 30 different countries. So where they come from. So, you know, what does this mean, and how do you manage so many responsibilities?
Well, it's truly tough managing it, really, because it's essentially 2 full-time jobs. Again, going back to the military, one of the things that I learned is that you always manage to 2 dimensions, right? One dimension is time, which we all have
Never have enough of.
And then the other is impact. So when I find myself in a situation where I have less time to do, not enough time to do all the things that I need to do, I think about it in that manner, and then I begin to prioritize what are the things that will give greater impact, and you put those in front. And then on a time scale, I kind of look at the priorities in my life, and I say, okay, let's shave off a little bit here and there. So I sleep an hour less every day. I run probably once or twice less every week. So you make the numbers work. And then on the work front, you then begin to say, okay, these are the things that perhaps I can delegate to other people because they are not as urgent, not as critical. And then you basically pay attention to the stuff that has high impact and that will change outcome quite fundamentally. So that's what I do.
Well,
and I can tell you, I run from meeting to meetings every day.
you're still looking fresh. That's good. I want to move on now to a bit about your vision, approach and strategy
Yes.
within GIC Real Estate. Now, the mere fact that you're sitting here up on stage, this is sort of a fresh new approach. You know,
Is it?
Well, you
Swee Guan used to do this as well.
Not so much. I guess I'm just your personal touch and what you're bringing to the culture there at GIC, and I guess in this new, what I think is a much more open stance about what you're up to.
You know, I don't think about it from the point of view of whether this is my personal touch or not. What's more critical, as I've said earlier, is that organizations that stand still often die in the long term. We've had a really great run in GIC for the last 30, 35 years. The question that confronts us really in GIC is, what's going to make us succeed in the next 35 years? It's the same question that confronts Singapore. We've been successful for 50 years. How are we going to move forward and be successful in the next 50 years? And that's why I appreciate the kind of work that APREA is beginning to do, because it's looking at the real estate industry in Singapore and saying, hey, we've had a great run in the last 10, 15, 20 years. How do we move forward and have a greater run in the next 15 years? Those are the stuff that occupy me all the time. And I will tell you that a lot of it, as I think about it, a lot of it is really, it boils down to 2 or 3 things. And the 2 most important things that I'll mention here, the first is, how do we continue to always attract the best and the brightest into the company? Because without great people, over time, the company becomes less. And once we attract those great people to work in GIC, the second thing, which is absolutely critical, is what is the work ethics and the work culture. And if you get these 2 right, then chances of having a great outcome increases dramatically. And that's what we pay attention
Is there a
to
3?
most of the time. The third one is great process.
Yeah.
Very often we sort of don't pay attention to that, but this, in our view, investing is about a disciplined approach.
We'll come back to that. Back to that.
And so process is important.
I want to talk about global investment.
Yes.
There's a lot of groups over time that have tried to look at real estate on a global basis, and really GIC were probably one of the first that really went out and sought to do a global asset allocation. So can you provide a bit of feedback or some insight into the evolution of the cross-border investment strategies, and I guess how do you approach global allocation when you look at your investment portfolio?
This is a truly fascinating area. In GIC, perhaps we've been fortunate because our mandate does not allow us to invest in Singapore. So as a consequence, we had to look to the global arena to find great investment opportunities. And local doesn't exist for us, and very quickly global became local for us. And we therefore said that, look, this is a matter of being able to do what is very fundamental, so we figure it out. And it is about getting great people on the ground so that the teams on the ground become the local, and so that we can underwrite projects systematically. We are an extremely bottom-up organization, meaning every investment is done from the ground up, analysis is done from the ground up, research is done from the ground up, and that then filters up through the system, and we then think about it at a global level and figure out which are the great transactions that have great risk-adjusted return. So that's a bottom-up process. What we have also done over the last 4 or 5 years is to say that while that's a great system, we really need to be cognizant of what the macroeconomic shifts and factors are that are affecting the globe. And therefore, where do we weight our effort? We stopped short of allocating capital. That allocation is done deal by deal as they surface, but we use the top-down perspective to inform us where better opportunities might be across the globe.
Yeah, and when I take that back to GIC itself, I've been having a bit of a read of the latest GIC report. Again, new open communication there. And the philosophy is to achieve good long-term returns. And the GIC report talks of GIC achieving strong asset price performance and returns over the past year. But it does talk about a cautionary approach with an outlook of lower, more modest prospective returns over the next 10 years. The report emphasises that investment going forward is about building a resilient portfolio without too much risk and appropriate diversification to avoid sensitivity to the likely volatility in equity markets. So it sounds like to me that you should be investing more in real estate. That seems like the perfect investment for this. And I also look, the allocation that is stated as the preferred allocation is 9 to 13% of the funds in real estate, and yet you're only at 7. So it seems to me you've got a checkbook and you should be going out and buying more real estate. What can you say about that?
You're absolutely right, we're underinvested. We're quite fortunate that we run a system internally that the uninvested capital that's allocated to real estate we are not charged a cost of capital. Because if we are charged, then it will encourage us to push money out through the door, regardless of valuation. And if you go back to some of our documents, and I believe this is in our website, we believe in staying disciplined when it comes to investment. Price discipline is very important because we think of ourselves as value investors. And so the question really is, even though we are at 7% and our allocation is 9 to 13%, if we do not see transactions that are at a price point that we think is a great investment that will give us good, stable long-term return, then we don't have the compulsion to push money out through the door. And that has been a great feature in the system. So yes, we would like to put out more money across the globe, but it really depends on whether we see those transactions that are interesting and that are of great value.
Okay. And also on your website, you've published a new feature article on the real estate team and what you're doing in real estate. So for any of you looking for greater insight, I suggest you go onto the website and look at that article. It gives some really interesting things, discusses. It talks about the benefits for GIC in real estate, investing as an asset class, including diversification and accessing the illiquidity discount found in direct real estate cycles. It also talks of an amazing collection of assets that you now have under management, It talks of the Time Warner Centre in office in New York, hotel, the Western Paris, retail, Blue Water, UK, industrial exposure in Japan with GLP, residential, the Shenyang Vanke in China. And on top of this, as you talked about price discipline, but I also noticed, having been in Australia, you've been divesting assets. I would say, if I had to categorise it, some of them are what we would call secondary assets, possibly not have to own through the long term. It seems to me you're heading towards a sort of premium core investment strategy in global gateway markets. I could be wrong, but is that where you're sort of heading? Premium core for the market ahead?
No, we don't have a conscious strategy of going for premium core. I mean, the thinking that underscores all the things that we do is really about being disciplined and rigorous in analyzing every asset and figuring out what are the things that we can continue to add value and generate more return if we continue to hold them, versus what are the assets that we can't add any more value. And so over the long term, it is better for another party who can add value to those assets and bring it to the next level to own those assets. So that's how we think about things. Underscoring all this is really the fact that our capital is long-term in nature. And so we usually take a long-term approach. And so long as we think that in the long term it fits the profile of what we are after, that's when we would decide to hold the asset for a longer term. Yeah. But having said that, long-term capital doesn't mean lazy capital. And that's why we impose that process of looking at every single asset in our portfolio once a year to figure out whether they continue to stay in, or it is time for us to part with those assets. And as I said, let somebody else who can take the asset to the next level own it.
Yeah, and when we chatted, you talked about this price discipline. And I think you're also saying you often go back to your underwriting of these assets, and you really look at them when they hit the threshold of return that you probably underwrote them on. And,
yes.
And that makes you look at them a lot closer.
Yes, correct. Well, actually, to be honest, whether they hit our targeted return threshold or not, yeah, we look at them quite closely, because if you like, I mean, you can't undo what's in the past. It is always about looking to the future. And with assets, that's always quite important based on current valuation. Where do you see the future of the asset? So in a lot of the instances where we have divested assets in Australia, as you have noted, is a fundamental look at each asset, and for those assets that we can't add value anymore,
out they go.
Yep.
Yeah. I'm interested in your views generally on the real estate markets globally, say over the next 12 months, and what's your view on relative markets? What are the key factors that you're looking at? Financial, economic, geopolitical. What's influencing your views? And I'd maybe, to make it easier, developing versus emerging markets, particular niches of asset class. Is there anything that's standing out for you?
Yes, a few key themes come to mind, right? For those of us in the asset management industry, one of the most challenging questions that we are dealing with right now is, what does the low rate mean? And all of us know that over the last 20 years, rates have gone from this level to this level. Can it go any lower? It is negative in real terms in a lot of places. And if the answer is no, then over the long term, next 30 years, rates are likely to rise. So I'm talking about very long term, right? Not necessarily in the short term. Therefore, if that's going to happen, what do you do? How do you think about investing, holding assets? Because when rates rise, at some point the spread between cap rates and bond rates will compress. And after it's compressed enough and there's no more spread left, cap rates will move up. So for us, what that means is that we really need to be very disciplined at looking at every asset and figuring out whether in the long term, which of those assets has income growth left in it. Because when cap rate starts to move out, then you need income growth to shelter the impact of cap rate movements. So that's the way we think about it. And so if you kind of think of the sort of assets that we have acquired over the last 12, 18, 24 months, they would fall into a couple of characteristics. One is spread to bond rates is relatively generous still. And the second is that there's income growth left in that portfolio.
And what about emerging versus developed markets?
Emerging versus developed. You know, I came across an interesting statistics yesterday. It was actually presented to me by PwC. It says E7 market, the BRICS plus Indonesia and Turkey, will over the next 10 to 15 years become the single largest contributing bloc to GDP globally. Think about that for a moment. Now, so therefore, if your sights are set on the long term, the emerging market must be where it ought to be.
Yeah.
Things, you ought to be paying attention to emerging market. And that's why we in GIC pay attention to emerging market. Having said that, in the short term, we all need to deal with volatility in the emerging market as global macro forces shifts, as the US dollar strengthens, because that's likely to bring about weakness in emerging market, as it historically is always done that. So we are mindful of the short term, but our eyes are set firmly on the long term.
Yeah, that's good. And can we touch on geopolitical risk? I mean, we all turn on the TV in the morning and just get a whole wham of a whole lot of things happening. Europe's got some instability at the moment. So how do you think about that in your long-term investing?
Two things. One, geopolitical risk will never go away. In every region that you deal with, almost in every country, there's always geopolitical risk to think about, and we factor those into our calculation. Second, what's important is not whether geopolitical risk is there. What's important is whether those geopolitical risks leads to long-term deterioration of fundamentals. If it does lead to long-term deterioration of fundamentals, we would be very concerned. But if it does not, then given that we are long-term in nature, it's about riding through the short-term volatility.
Yeah. It doesn't change your view on, I guess, key global gateway cities?
No.
No. Yep. Through the cycle.
Yes.
Okay. Now I want you to take a little break because, again, I've done my research and you've been incredibly active over time. So I wanted to, I guess, talk about some of the deals you've done. And this is only over recent times. So this is my work in Japan, $1.5 billion acquisition of Pacific Century Place. Turkey, you've bought a stake in a real estate company. New Zealand, a $1.1 billion joint venture with Centre, a JV with Goodman Property Trust and Industrial. Indonesia, 500 million JV with the Rajawali Group. Korea, you've bought a large shopping centre with CPPIB. India, a number of partnerships, including the Brigade Group DLF in residential, a JV with Tishman Speyer in office. US, the Incor Industrial with GLP, $8 billion. JV with Macerich, 5 malls in the US. Brazil, an interest in a Rio de Janeiro shopping centre. Australia, the Igloo student accommodation and the divestments we've talked about. Europe, logistics partnership with Exeter out of the US and a London development with British Land. I mean, how, first of all, do you cope? And how do you deal with this amazing diversity of deals and frequency of transactions? And I mean, is there any favourite in there that you want to talk about?
Favorites, let me see. It's like asking me to pick which among my children are my favorite. How can you possibly do that?
Yeah.
So
how do you cope?
Here's how we think about it, right?
Yeah.
Buying is only the first step. It's about after you've bought them, nurturing these assets over the long term so that it delivers the sort of return that we underwrite on these assets. How do we cope? We try to be thoughtful in all that we do. So we run a system now where transactions come to the investment committee globally, and we see probably about 80 transactions a year at that level. And then at the regional level, each regional head would see probably a lot more. So we run things on a regional level. So you have the Americas region, the European region, as well as the Asian region. And a lot of activities happen in those areas. And the larger transaction then filters up to the global level.
That's an amazing. Can you talk about the philosophy of scale? You and I have talked about it a little bit, but this is the advantage about being able to participate in very large transactions. I don't know, maybe you'd reference GLP, Incor or something,
Yes.
but how do you?
So given our size, we always like transaction with scale because it's efficient for us. But we don't necessarily seek them out just because they are large.
Yep.
And I have to say that you have referenced a few times that we are focused on key gateway cities.
Yeah.
Actually, it's not that gateway cities are great investment destination per se. It is a question of if we believe that alpha is truly rare, then you need to focus. And therefore, for us, with 150 people around the world, we have no choice but to focus on key markets where it's deep, where the transactions are a lot more, because then we can get the local team to become truly experts and local in those markets. Otherwise, it would be tough for us to generate alpha and beat the benchmark.
But do you think that it sets you apart that you're able to participate in such a large transaction? It sort of gets rid of a range of competition that you'd otherwise, be able to compete on deals?
Yeah, we don't think about it that way because
Yeah.
these days, honestly speaking, there are a lot of people who can probably write a really large check as well. The way we think about it is that our teams on the ground are really what differentiates us. They understand those markets a lot better, and then consequently, they are able to underwrite complex transactions a lot better.
Yeah.
And we hope that gets us through the door and to better transactions every time.
Yeah, I mentioned GLP only because I'm curious about how you look at listed markets, because you're obviously participating in the direct side, but how much of an influence of future exit provided by the potential of listed markets provide in your thinking on the deals that you do?
In all transactions that we look at, we always think about possible ways of exit. But those are sometimes hard to predict because if you are thinking about 10 years down the road, a number of things can happen. So we do from time to time tap on the public market as a form of exit. They are not always neat. And then a lot of the times it's really looking at markets where there's better liquidity. So we think about that. So a variety of things happen. The other point that I really want to make about public market versus private market, we are in a fortunate situation where we look at things from what we call four-quadrant perspective. So we look at things from the across the entire capital structure. We invest in real estate debt as well as real estate equity, listed equity. So we move quite flexibly between these segments. And that's great because at any point in time, we get to see value across the entire chain, and then we figure out which part of that chain actually delivers the best risk-adjusted return.
Yeah, fantastic. I want to talk about partnership approach. When I went through those list of deals, a lot of them are joint ventures or
Yes.
Or partnership with in a fund GP of some sort. So you clearly are really picking partners as part of your transactions. What is your view on what makes a good partner?
Right.
For those in the room who may be interested.
So first thing is that for us, the only way to scale is with partners because as I've said, 150 people around the world, we are invested in more than 30 countries. So without partners, we would never be able to reach the kind of scale that we have. So partners are absolutely crucial for us. And with partners, what we always like is repeat business. And if you think about it in that way, it is absolutely crucial that over time we build a high level of trust with our partners. And that's why we always say that the sort of partners that we like are the sort who we know that if there is a bad news, they would be willing to come to us very early on in the process and say, hey, this is what happened, so that together we can then deal with it. If we can build partnerships to that kind of level of trust, then that's where all the magic happens. And that's why over time, as I travel around the world, a lot of people always ask me, hey, as you travel around the world, you must visit a lot of your property. And the truth is actually quite different. I hardly visit a lot of property these days. I spend most of my time when I'm on the road visiting with partners and having that touch point with a partner, because it's absolutely critical. I would like for those partners to be able, if there's any bad news, to feel that they can pick up the phone and give me a call.
Well, for all those dinners you're having around the world, you're looking in good shape, I must say. Competition. When GIC first started this, as I said, you were one of the very first global real estate investors of scale, and it seems now that in the world we're in, there's a large number of very large private equity firms, a number of big sovereign funds. I mean, has the environment changed in which you're competing? Do you feel competition from these different parties to secure assets? Do you have to be more aggressive in sort of some of your underwriting in terms of this competition? And I'm also interested, I mean, on a lot of these deals you're collaborating with some of these other pension funds. How does this whole environment work for you?
So I would say that the environment has changed dramatically. All of us in the industry knows that these days there are a lot more sovereign wealth funds. And so in the light of the, and this goes back to what I was saying earlier about organizations can't be static. We always need to be thinking because the environment is changing. And so for us, we think about it differently. The competition is there at some in certain situations, we essentially think about whether we can collaborate because there in a lot of transactions out there, that market is not finite. So in Korea, for example, we ended up joint venturing with CPP, and that's an interesting transaction because we did that transaction with CPP without a GP leading it. So that's interesting, right? In certain situations, we end up with HKMA, for example, in 101 California in the US. And in the in-call transactions, CIC is in there together with us and some other people. So truly, I think it is a complex web of managing these relationships, and we try to manage it as best as we can. We also think about how we can become better at what we do, not just simply from whether thinking we can be doing larger transaction or not. And part of the effort that we are focused on now is about how we can use technology and data to supplement what we do in the real estate area, and how we can use those much better so that it makes us sharper and better at what we do.
Yeah, okay. Can I turn to Asian markets? Now, again, I've looked at the asset allocation through your GIC reports, and as an organisation, you have a much heavier, allocation to Asia than many other, I think, global investors. So, and you made the comment about being there. Do you think you understand Asian markets better? Do you think you've got a competitive advantage in these markets? Do you think other global pension funds are just saying it's too hard? What are your thoughts?
I think it's a function of two things. One was, as you have said, because we are headquartered in Singapore, in Asia, and so the ability for us to access this market increases somewhat. Second is a function of time. when we started thinking about Asia, a lot of the managers were not present in Asia. And so as a result, we built that direct capability, which allowed us to access all the different markets. So we were able to build up that portfolio a lot quicker. And so the 50% and the 52% in Asia that we see today is a function of those two things. And when we were looking at it, it was just post-Asian financial crisis. So it was a great vintage to pick up assets, and we did a lot of that during that time.
Oh, excellent. Sort of last key question I want to ask you is about Asian REITs. So you were there at the beginning, you know, one of the founders, trying to convince institutional investors about the benefit of REITs. We even erected big styrofoam 8% return things in the middle of Raffles Place.
It's
so
amazing,
people would,
isn't it? 8% distribution yield.
8%.
Where do you find that today?
I don't know, it's a bargain. And what's your view on how important the development of Asian REITs have been to the real estate markets generally in Asia? And, you know, obviously we're sort of 12 years in now, 13 years in. There's going to be some challenging times. What do you see for the future of Asian REITs?
Absolutely critical. If you look at the Japanese market, if you look at the Singapore market, the amount of transaction went up overnight once REITs have been established. And if you frame the regulations correctly and the sector starts to grow, the market becomes more liquid. Price discovery becomes easier. Depth of research becomes greater. And as a result, the whole market becomes much more transparent. In every market that we have seen REITs being implemented properly, over time, when these happen, the industry grows from strength to strength. And I wish that more markets in Asia would do the same. And that's why I appreciate the work that APREA is doing in trying to engage all the countries in the region, the regulators in these countries, to frame these regulations, because they are important. As Peter said, this is part of the food that needs to be on the table.
Excellent. Now, I can think your plane's being called. The boarding, you know, is up there. But before you do, I want to, and I've only got a few minutes left here.
Yes.
I want to give you the rapid fire questions, okay?
Oh boy.
Okay, so we've done this before, so strap in. You're only allowed to give a short burst on each of these topics.
Okay.
And I'm going to have them keep coming at you.
Yes.
Okay, first one. China, investing into China real estate.
Focus on long-term, be mindful of the short-term volatility.
China, Chinese money investing in real estate outside China.
Thought it would have come earlier.
Should there be more?
It's
Is there more?
inevitable.
All right.
Get used to it.
Okay. Japan.
Think about tourism.
All right.
It's huge.
All right. USA.
Recovering nicely, hopefully, and it's a deep, transparent market. Can't be ignored.
Retail.
Retail. Go for dominance.
Global financial crisis.
In the past, hopefully we all learn from it.
Indonesia.
Market to watch.
Australia, New Zealand.
Will always be one of our key markets given its liquidity and depth.
South America.
Watch Brazil.
Logistics.
Long neglected, but pay attention if you pay attention and add it to your portfolio.
Currency in the context of global real estate investing.
One of the toughest questions you can ask. Everyone is struggling with what to do with currency.
Private equity real estate funds.
One of the many things that we invest in is about finding great managers.
Residential.
Residential. If all statistics are right, pay attention.
India.
India. Tough market, but for those who dare try, there are supernormal profits to be had.
Digital disruption's impact on real estate.
Will be huge.
All right. Europe.
Europe, it will be a tough market. Pricing is high, but fundamentals are weak.
Best, most interesting niche real estate areas you might want to focus on?
Gosh. Niche real estate. If you believe in demographics, healthcare.
Leverage. Say, call it high leverage, 50% plus.
Use wisely.
Goh Koh Huat, thank you for spending some time with me. Your
Thank you
plane is
very much.
boarding. Everyone, thank you.
Thank you very much.
Ladies and gentlemen, what a fantastic kickoff to the event, opening up new themes. Could you please thank not just Goh Koh Huat, but his fantastic interviewer in the departure lounge of real estate, Antony Green. Please give him a great round of applause.